We are less than a day, less than 24 hours away from the jobs report. We'll keep tabs on that Canadian dollar. But right now we're showing you shares of Cineplex, which is a stock that is weaker on the session. The theater giant reported revenue growth over the last year, topped estimates, attendance was up, although adjusted earnings fell short of some Wall Street expectations. The company is very much focusing on getting ready for the long term. Let's bring in Ellis Jacob, the president and CEO of Cineplex, for more on what's been happening with the business. Ellis, it's nice to have you. And obviously, I think one of the things we're reminded of with your latest quarterly results is that, yes, if Dune is in theaters, and I went to see it, that's a good thing. But you've increasingly been looking to other businesses to grow the pie. Can you tell us what's happening with your broader business?
As we continue to focus on different ways to maximize our revenue on our square footage, and talking on the theatrical side, we continue to bring in product from international content. We're also working on the premium formats. As you saw, we basically deliver 41% of our box office from premium formats like Ultra AVX, IMAX, VIP, D-Box, ScreenX. So that's something that we'll continue to improve and build. In addition to that, we give our guests a wide array of content, even beyond movies, in the fact that we've got concerts, we've got other activities that are taking place at our locations. And then looking at the location-based entertainment business, we have 13 of them across the country. We are opening 3 more in 2024. That business has had some very strong margins, above 25%, and we will see that as we have got a lot of synergies from both businesses and using our loyalty program. And our goal is to really create an entertainment destination for Canadians, whether it's in the rec room, whether it's in the movie theaters, all of the things that when you think about entertainment, you think about Cineplex. And the loyalty card really helps too with the overall relationship with our guests.
So let's put in context. No, that's helpful. So let's put into context the fact that now we're entering to the summer box office season. I'm sure you're going to get a million questions about your expectations on what happens at the box office this summer. But has that allowed you to have, I suppose, less riding on what happens with the theatrical releases this summer than maybe, your business would have 5 or 10 years ago?
Yes, because of the diversification, it helps, but it's still an important and an integral part of our business. And, we just returned from CinemaCon, which is the annual movie convention in Vegas, where you've got, over close to 3,000 attendees from around the world. And one of the big things that resonated from all of our studios was basically that content is coming back, and they are very focused on theatrical. As I've said multiple times, we are the engine that drives the train, and the studios really feel that their portfolio is going to continue to grow, and more movies are being moved into 24, and we see a great slate in 2025. So I'm pretty optimistic about moving forward. And then you've got Apple and Amazon, which are also, with content and wanting to have that theatrical experience. So I think, unlike what the environment says, our business is going to be back and be back strong. And there are certain countries, like in 2023, when you look at a country like India, their box office was 99% of 2019, which was the benchmark we were all going with pre-COVID. So if the content is there, guests are going to come. And we've seen that in a big way with Oppenheimer and Barbie. And I think you're going to have opportunities in 2024 with movies like Inside Out 2, Despicable Me 4, Deadpool 3, Twisters. They're all going to be good contributors to our overall box office success.
And so how would you say at the end of the day you feel about where the business is today? It's been such a complicated few years, Ellis, and obviously getting through the pandemic and working through that part of it. Obviously, there was originally a different game plan for the ownership structure for Cineplex going forward. Here you are exploring a lot of different diversification tools. You did talk today in your press release about the long term. Is there anything else associated with the long term that is part of the priorities of the company right now?
Yes, I think if you look at our three business areas, on the theatrical side, we will continue to improve the experience for our guests, which to me is really, really important with the addition of, the Ultra AVXs, the VIPs, the D-boxes, the ScreenXs, the IMAXs, the laser in the projection booth, and that will continue to have that wonderful experience we provide. On the food side, we've also now introduced the ability to, acquire your concessions online when you get your ticket, and you can seamlessly pick it up in the theater and go to your seats. So that's made, that lineup that people used to worry about not an issue if you're able to do that online. Then with the rec rooms, we continue to improve the offerings and looking at ways to maximize the value of the square footage in those locations as much as in the theatrical area. And the last area, which we haven't talked about, which to me is very important, is our media business. And, we are very focused on the digital media and our cinema media. On the digital media, we just, did a transaction with Cadillac Fairview for their malls and Common Air in the province of Quebec. We now have 9 of the top 10 malls in Canada from attendance perspective, and we continue to look at opportunities. And we've got, real penetration in that area. Mm-hmm. And the cinema side is starting to come back. And a study that was just done basically proved that the cinema advertising is the most captive when you compare it to, all of the opportunities that the guests get to review, online. And that will continue to come back and grow. So I'm pretty optimistic about where things are and where we are moving forward. Yeah. And 2024, the back end will be stronger. And I think by 2025, we'll be looking to be in a very positive position. And we can get to our 2019 numbers, even if attendance is at 80% of where we were.
Now, against the backdrop of everything you said, Ellis, I have to remind our audience of what's been happening in the market. And I don't need to tell you, you're a significant shareholder. And obviously getting through the pandemic was certainly a big part of the story. But if I look, over the last 3 years, or the last 2 years, or the last year in terms of the stock performance, it has been a struggle to get a lot of shareholders on board. Bay Street seems to be on board. Analysts like the stock. Most think it's worth a lot more than where it's trading right now. How do you address that issue?
Well, we've done a lot. I mean, in the first quarter, as you saw, we basically refinanced our balance sheet. And I feel that, as we move forward and we continue to prove what we are doing, we will succeed. And I think there's a situation I find in the marketplace where our small caps are not being given credit for delivering as we are. And the fact that we got through the COVID, the strikes, I think we've basically proven that we can deliver and focus on growing this business into the future and giving shareholders a great return. And again, one of the concerns is that shareholders are looking for dividends like we used to pay in the past, and we will readdress that once our leverage is in a stronger position, which I expect will be the next 9 to 12 months, and we will be there.
I was going to ask you, so within the next year, it's plausible that the dividend comes back.
Yes, we are focusing on, the alternatives. We've got the dividend, we've got the share buyback potential. We've also got opportunities to invest and grow the business. So we look at all of the different possibilities. But the dividend was a big part of, what we did in the last periods before we actually did that deal with Cineworld. And, didn't close because of COVID.
Right.